Hello and welcome to the Voodoo free video for Monday, July 21st. This is David, and look, there are a lot of things to like about the markets here. We can see that the S&P 500 here in June came back, tested the Voodoo fire line from above, and went back up. This is the most important of the Voodoo line levels, and holding it is bullish. Up from there, we've gotten above both of the skylines. These are minor levels, but being above both of them, including testing this skyline from above and holding here last week, pushes us upwards towards the snow line. Now, that's not too far above today's high, but also to like about this market is that we have made fresh all-time highs up close to that skyline or snow line level. With that said, today's fresh all-time highs and Friday's highs, which were at the time all-time highs as well, are coming with some warning signs. And those warning signs are that both today and on Friday, while we did make new all-time highs on the day, at the end of the day, the NYSE breadth was negative. That is, there are more stocks down on the day today on the New York Stock Exchange than are up, and the same was the case on Friday. Now, look, the all-time high was made earlier in the day. We sold off and closed near the lows of the day, still positive, right? And at the high, breadth was positive, but I always consider it or I'm always a little bit mistrustful of highs that are made on poor breadth, whether that's negative breadth or even positive breadth that just isn't that strong. I always consider it a little bit of a warning sign. And 2 days in a row where that's the case is even more of a warning sign. It doesn't mean anything necessarily imminent. After all, we had this same condition that I talked about today appearing on Friday, and we were still up on the day today. At the same time, if we consider this this blue line on the chart, right? This blue line is cumulative breadth. It's just that NYSE breadth day after day, right? Just added to the prior day. So the line is going to go up if the breadth on the day is positive, and it'll go up by the amount that breadth is positive. On a negative day, it will head down. So as you can see, right, we have 2 days where the line heads to the downside. Now, one of the reasons I watch this is it's always going to be more constructive when we make new all-time highs with all-time high positive breadth, as we were doing back in here, and you know, the prior high in breadth prior to this February through April decline in the markets was back here in December. And you can see that we were already starting to make higher highs in cumulative breadth back here as early as May. And that is also always going to be a relatively positive sign if breadth leads price to new all-time highs. That was one of the things that was leading us to be constructive in here. However, one of the more reliable negative signs is when we have cumulative breadth divergences. That is, when we come in here and make higher highs in cumulative breadth in this in the S&P 500, as we were doing here in January and February, higher than what were at the at the time all-time highs back here in December, but where cumulative breadth is coming in at lower levels. It's one of the more reliable negative signals in the market. And that's a condition we have now, right? The all-time high in cumulative breadth was back here again when the market was making on that day all-time highs. But since then, we've had several new all-time highs, all of which have had lower cumulative breadth readings than back here. Now, I want to be very clear. I'm not anticipating or predicting a sell-off like we had here, which was preceded by this cumulative breadth divergence for a few reasons. One of them is that cumulative breadth divergences that last over longer time periods, like this couple of month period that between peaks like we saw back here, is more meaningful than just over a couple of days like we have here. Secondly, we're still very close to that peak in cumulative breadth and up here near the highs, and this could be the sort of situation where the divergences could be easily erased if we get a couple of days up on strong positive breadth. We could make higher highs in price and cumulative breadth together. So for all of those reasons, I'm not predicting that, for example, tomorrow is going to be a big down day and the next good size decline. What I am saying is that this warning is telling us, you know what, let's be relatively tight on our stops and know where our exit is up near these levels. And for myself, I'm using these swing lows from last week, which are pretty much right at this 61.94 Voodoo skyline. A break that gets cleanly below both of those is going to be a warning for me to get out for the next sort of pullback. Now, if you've been listening, you know I'm just looking for a pullback to this fire line area, but I am starting to try and put on some light hedges, but leave room to get more significantly hedged on a break of that level. So some of the ideas that we'll talk through a little bit more in the premium video are starting to look at some put spreads, as well as maybe taking some volatility positions, selling some puts in VXX. So again, we'll get to that in the premium video, but I wanted to let you know levels that we want to raise stops to, in my opinion, and some warnings that are starting to emerge. Even if you like to follow along with that idea that there's nothing bearish about new all-time highs, just realize that these particular all-time highs are coming with a warning sign. So that's what I have here for this evening. I hope you found it useful, and I'll have another video for you next Monday. Until then, as always, good trading. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.